Maximus Analysis here for January 13th, 2016. We see we had an additional amount of selling going on, and we have pretty much a couple different levels that we have to see hold. And that's going back to these previous moves down from last year, October, which the low of that is 1813. The low of August is 1831. And the low of, I guess, September is 1861. So these are pretty much the lows that we have going on here. If we break those, we have a lot of air actually. I think we got 1732, and I'm looking for something else. I'll just have to keep looking at previous lows or maybe even previous highs to see 1700. And besides that, I don't really see much. I'm trying to look to the left, and we can see that again 1600 is probably a major level that would be breached. But again, we haven't broken these levels as yet. We do have some significant movement this week, but again, we see it at these significant 10% retracements that they have rallied before. Again, I am in shorts, but you just want to kind of look at things because these were historic, very similar rallies. You could just put these up right here. You can see that the price movement was very similar, and we got to see what happens if they go the opposite direction. So again, 10% rip will be breaking below this low of 1983. Excuse me, I keep saying 1831. Right now we're at 1884, closing near the lows for the day. We want to see where we open up. Again, you can look at it on the daily time frame, and that's what I'm going to focus a lot on right now. And you can kind of see where we are in regards to price action. You have the NQ gave up about 132 handles today, and you can see that again they have they didn't break above at all. They didn't give us the oomph that we were expecting from a low. They closed near the lows today. So again, we're going to see if they get down to this level of 1450 and 4000, how they're going to react. Okay, we've been there before. These rips are, historic, and again, I'm not saying that it won't sustain itself, because I can't. I can't say that because of how things have been moving constantly in a choppy range. But you can see I kept this midpoint of the chop up, and it's just been, it's been very, very rough because you don't really get a lot of follow through when you're trying to buy the dips. But they didn't have the run up like they did here. So we'll see what happens if they follow through on the way down. And you had crude. Crude is 30.71. Again, it's unless it does something very quickly, spikes back up to 36, 37.5. We'll continue to look for it to hit a target of potentially 25. I won't say 18. I think it's 25, and then it would have to base for a couple weeks at least. So you had a lot of names that gave significant pull, had a significant movement to the downside today. You want to see follow through with Apple. It's oversold a lot, but 1, 2, 3 bar pullback, and it's been pretty much going down. You had Facebook down almost $4 today. We'll see how they react tomorrow. They gap down, and how they react if they gap down. If they gap down and rally all the way back up to basically around close to the halfway mark of today or not. So you had Amazon down $36, coming and filling this gap, filling this top right here. You also had Netflix down $10 as well, and again it's breaking below, and you had this huge candle, and this is the thing that's showing me more weakness than anything. This huge candle up, and it didn't follow through at all. It actually came to the low of it. So breaking down below there and going and breaking this 200-day moving average and that psychological $100 mark would be significant for them. Tesla down $2. Again, I told you when I got wrong long, and the reason why I do this is because I would like to at least share with everybody that trading doesn't mean that every one of your trades goes well, no matter what the internet tells you. So I got long here, and I took a dump. It gapped down and continued. So the thing also is to say, if you're wrong, get out, because I could be stubborn and be down another 30 bucks because I wanted to come back, or I could have added the position. Averaging in is probably one of the easiest, most common way to blow up your account. So Netflix down 10 bucks. You have Apple down about $2.57. Baidu down. So you have a lot of carnage regarding the names, but you just want to make sure that you're looking at the weekly time frames and kind of seeing where things go from here. So are they going to come and fill up this gap on Baidu? We shall see. So again, buying the dip this time around. Again, when it's a bull market, it's very you can see that at the bull market, every dip being bought just held. But if we're in different times, just adjust your strategy accordingly, because buying the dip right now is a very risky type of proposition if you're not funded right. Even if you're funded right, because there's an old saying, the quickest way to a small fortune in trading is to start with a large one. So don't let the account size tell you, oh, this trader only cost me $6,000. I have a $600,000 account. You know, you keep adding in. I've known people that have taken $600,000 accounts and in a year made them $100, literally hundreds of dollars. So again, just look at that and try to manage risk, because that's all you can manage in this game. So we'll see exactly what happens. If they're gonna, get past these major levels, and see what happens on tomorrow. If we're going to get a gap down and how it reacts if it does gap down. Take care.